So, here's a wild thought. Can an AI predict the stock market just by reading the news? That's the huge question we're going to tackle today, right at the crossroads of high finance and cutting-edge artificial intelligence. Let's get into it.
Okay, just think about this for a second. What if you had an AI that didn't just crunch numbers, but could actually read the room? An AI that could understand the collective hopes and fears that are really driving the market. What if it could get a read on the mood behind the money? That's the core idea we're digging into.
Well, before we can even get to the AI part, we've got to talk about the fundamental problem it's trying to solve. And that is, the stock market is just wildly unpredictable. It's a classic challenge, right?
And look, this is not some new revelation. Researchers have been banging their heads against this wall for decades. Why is it so hard? Well, it's because the market isn't just about logic and data. It's a messy, chaotic mix of that and, raw human emotion. You see, the old school models, they're actually pretty great at looking backwards at all the historical charts, prices, and trading volumes. But they almost always miss that one key ingredient, the human factor that can make a stock go crazy, no matter what the charts say.
So, what is this secret sauce? This missing ingredient? It's the market's mood, the collective feeling of millions and millions of investors. And this, right here, is where the new research gets really, really interesting.
Yeah, this breaks it down perfectly. On one hand, you have the technical data. That tells you what happened. The price went up, the price went down. Simple. But then you have sentiment data, pulled from the news, from public chatter, and that helps explain why. And maybe, just maybe, it can tell us what's going to happen next.
And the technique they use for this is called sentiment analysis. It's a super powerful AI tool that basically reads through thousands upon thousands of news articles and automatically figures out the vibe. Is this headline positive? Is it negative? Or is it just neutral? It's like having a real-time finger on the pulse of the market's emotions.
And get this, we're not talking about scanning a handful of articles. The researchers fed their model a massive, massive diet of data. We're talking nearly 50,000 financial news articles. All of that was just to train the AI to pick up on those tiny little shifts in the market's collective feeling.
Okay, so you've got the hard numbers on one side and the narrative on the other. How in the world do you combine them? Well, you do what any smart manager would do. You assemble a dream team, an AI dream team in this case.
The official term for this is an ensemble model. And honestly, the best way to think about it is like a committee of experts, right? Instead of just trusting one genius who might have a blind spot, you bring in a whole team of specialists. Each one looks at the problem a little differently, and when they all vote, that final decision is almost always way stronger and more accurate.
So, let's meet the team. You've got these models like LSTM and GRU. Now, what makes them so special is they're brilliant at remembering patterns over long periods of time, which, for financial markets, is absolutely crucial. You can think of them as the team's seasoned veterans, the ones who've seen it all before.
In the process they follow, it's super straightforward. Step 1, analyze the price data. That's the what. Step 2, analyze the news sentiment. That's the why. Then step 3, the whole AI team gets together, combines all those insights, and debates it out. And finally, step 4, they make one single unified prediction.
All right, so the theory sounds great, the process makes a ton of sense, but here's the real question, right? How did this AI dream team actually do when they put it to the test? Let's check out the results.
I mean, this is the million-dollar question, isn't it? Does all this fancy tech, combining the numbers with the feelings, actually give you a real edge?
Well, the answer seems to be a huge, resounding yes. The model hit an average prediction accuracy of nearly 92%. Now, in the world of stock prediction, a world that's notoriously difficult, that number it's just incredible.
And to put that number in perspective, look at this. When you stack it up against other recent, pretty sophisticated models, this thing isn't just a little bit better, it's playing in a completely different league. It's outperforming them by a really wide margin. Okay, so high accuracy is great, but what does that mean in terms of actual money? Well, in a simulation of a real-world portfolio, the trades guided by this AI grew by over 45%. In that exact same time, the market benchmark only grew by about 28%. I mean, that's not just beating the market, that's leaving it in the dust.
But what about risk? Because high returns can sometimes mean high risk. Well, check this out. The model generated what's called a positive alpha, which is just a fancy way of saying it beat the market. But here's the really impressive part. It did it with a beta of less than 1. All that means is it took on less risk, it was less volatile than the overall market. So you're getting higher returns with lower risk. That is basically the holy grail for any investor.
So, what are the big takeaways here? What does this mean for the future of investing? It really feels like it's pointing to a brand new way of looking at markets, where data science and human psychology aren't separate things anymore. They're totally intertwined.
And if you want proof, look no further than this example with Tata Motor stock. Without reading the news, the model was already pretty good, hitting an accuracy of about 88%. But the second you let it start analyzing news sentiment, bam, the accuracy jumps to over 91%. That gap, that is the power of understanding the why behind the numbers.
And at the end of the day, that's the big lesson here. If you really want to understand where the market is going, you can't just look at the numbers anymore. You have to analyze the narrative, the story that people are telling themselves about those numbers.
So, that leaves us with one last kind of mind-bending question. For centuries, everyone said the market is just a fight between two emotions, fear and greed. If AI is now actually learning how to read those emotions at a massive scale, what can't it predict? What other unpredictable parts of our world might it one day figure out? It's a pretty powerful thought to leave you with. Thanks for tuning in.